let's bring it home on day one. We have 3 great panels to go this afternoon at Intersect. And in this one, we're going to get nostalgic. Not really. What have we learnt over the last 12 months? From data hacks to banking collapses, it has been a very interesting time. And so we put together an amazing panel to look back over the last 12 months and find some lessons in it. To do that, we've got as our moderator Raj Rayat from Airtree, where he looks at companies for pre-seed and growth investments across ANZ. He's also a board observer, and I say that with an ARD, not an ORED, of several of Airtree's portfolio companies. Raj was an early employee at Lendable, the fintech startup using data science to expand fair access to financial services in emerging markets. He's worked as a data scientist and investor in Nairobi and London, helping Lendable scale from 0 to 250 mil. Ladies and gentlemen, put your hands together for the amazing Raj. He and I are going to do a startup together one of these days. Now, our panel here is Dan Draper, CEO of Cypher Stash and the founder. It's a data security startup building searchable encrypted data storage platforms for sensitive data. One of the conversations we've been having today, Dan's worked as a VP of Engineering at Medical Director and Expert 360. He is an experienced cryptography engineer, and his mission is to empower all developers with the knowledge they need to build secure applications. A man you want to know. Put your hands together and welcome Dan to the stage. Alistair Faulkner is the co-founder and CEO of Darwinium. He's got a passion for social equitability and is living out his vision to make the digital world safe, fair and accessible to everyone with the creation of Darwinium, a next-generation digital security and fraud prevention platform running on the perimeter edge. Prior to Darwinium, Alistair, and he sort of says this is his claim to fame, but no, I actually reckon that Darwinium is going to be it. We're just not there yet. We are on the way though. But he co-founded a little company you may have heard called Threat Matrix, the world's leading digital identity company. Of course, it went on to be acquired for $1 billion dues by LexisNexis. He is buying the Krug after today's panel, ladies and gentlemen. Put your hands together for Alistair. And finally, Diane Challenor, the co-CEO of Constantinople. Di has over 20 years of experience in global banking in Hong Kong and Sydney. Alongside Constantinople, there is Citibank, JP Morgan Chase, and Westpac. Di is the co-CEO and founder of the software startup, builds a complete banking platform with the goal of upending banking. Sounds like fun. Ladies and gentlemen, over to Raj. Take it away. Have a great time. Give us all the gossip. Welcome them.
Awesome. Is this on, Simon? Yep, there we go. Thank you, Simon, for that wonderful intro, and thanks everyone for being here. We've certainly bitten off more than we can chew in 30 minutes, I think, with covering all of the cybersecurity incidents in the last 12 months, as well as a couple of banking failures. So we're going to see how much we can get through. But let's just jump straight into it. I think Simon did a great job introing. Let's skip that and let's get straight into what we've seen. Let's start off in cyber. So we've seen a number of incidents locally and globally in the last 12 months. Medibank, Optus, the breach of tens, I suppose, of millions of customers' personal data. Perhaps we can start off with just, well, I'd love to get your guys' take on it. What help us place this in, local context.
I can start if you like. So I think what's interesting about last year, I mean, obviously Optus and Medibank and many others were in the news. The crazy stat that I heard recently was that Australia had more data breaches in 2022 per capita than any other nation on earth, which is stupefying to say the least, but there's a number of really interesting reasons why that occurred. First and foremost, there's some pretty significant geopolitical shifts going on right now. I was fortunate enough to have attend a luncheon with the former head of the NSA, Admiral Michael Rogers, about 3 months ago, and he shared with us that really it's in many ways Australia's tighter alignment with the United States and AUKUS and those kinds of things that have made us a much bigger target. And yet Australians, I think, maybe hopefully less so now, but certainly 12 months ago, were still of the view, well, who's going to attack us? We're just little old Australia. Well, it turns out lots of people. But the other thing that's really important to talk about in this context is why and how the breaches are occurring. So it's not actually just people attacking systems and breaking into servers and things like that. 90% of breaches are breaches on an individual. So an individual person in an organization that has more access than they should, and they've been compromised. They've had their password stolen or phished or what have you. And then if you compare that to one other stat, which I'll leave you with, this is a United States stat. If you will, happy to assume that America and Australia are similar in this respect, but 70% of employees in the US have access to data that they shouldn't have. So you put all these three things together, geopolitical tensions, 90% of breaches are against individuals, and 70% of employees have access to more data than they should. We've got a pretty serious problem here.
Oh, that's phenomenal. That's great context. Thanks, Dan. I'd love to come back and ask you a little more about what organizations can do about that. But Di, Al, any thoughts there?
Look, I would have I mean, firstly, people ask me, what do I worry about when I'm running Constantinople? The first risk I actually say is cyber. Because it is it's so difficult to manage because the threats are really broad. I was kindly introduced for 25 years in banking, and in a banking institution, there's the CISO, there's a security officer. It's sort of this group of people that no one knows who they are, and they're secretive and they have meetings, and it's not really clear what individuals need to do about security. And so when we started Constantinople, we really believed that security needed to be everyone's business, and so a decentralised management of security. So yes, we have a security officer within our company, but it's my role as a CEO, it's the co-CEO's role, it's our chief product engineer's role to own security all the way through the company. So we have decentralised security management into our squads, and are really ensuring that every piece of code, every API that's built, everything we do is with a security mindset. So I think that often it's a very simple statement to make, but making it everyone's business and everyone thinking about security. It's not someone in some secret room that looks after it, and that's really what we've tried to do at Constantinople, and quite successfully so far.
Yeah, I mean, the margin for error is so slim for a business like Constantinople. You're working with banks and you're touching their most precious thing, which is their customers and their data and their money.
And it's a company-ending event. So it has to be something that everyone in the company is focused on.
Fantastic. Al?
And just echoing of both those comments, particularly I think from what Dan was saying, is that there's a lot of focus on securing data at rest, and from a compliance perspective, I think Australia and many other organisations have felt rather complacent that, okay, we've checked the boxes, we've done what we need to do, but the biggest risk actually outside of that is how data's being accessed. At some point you can build the biggest castle wall, right? But you've got to be able to let down a drawbridge to enable customers and suppliers to interact, and that's the weak spot. And so what I've seen over a decade in fraud prevention also is that there's another trend where we've moved from just being identity breaches being used to do fraud, so verifying someone's identity as someone signing up this account with some identity that's been stolen from the web, to actually corrupting and targeting the individual. And so that might come from installing malware or fooling someone to download something to fix their computer. But it's fun fact that in Australia more was lost to scams, right, which is individuals out of pocket losing their retirement money, versus just your pure kind of third party or your malicious fraudster. And so what that means is that everything that we know about fraud prevention is broken either now or very, very near future, with the fact that you have all this data on the dark web, AI, the ability to simulate or mimic every single one of your customers at scale. And we have to take a new approach to the way that we protect their customers, protect their data. I mean, the average organization has at least 10 or 12 different fraud or identity or intelligence or security tools, across that customer's journey from onboarding, authentication, and payment. Every single organization you talk to, engineering is the single largest bottleneck to be able to deploy new capability and to be able to react fast enough. And when you're dealing with AI or large organizations, distributed organizations at scale, they're able to innovate in an hour. If it takes you 6 months to a year to push a new fraud model or get a new feature or get to a new vendor, you're going to be fighting a losing battle.
Al, maybe if we can linger on that for just a sec, could you help the audience take this to a practical level? When people say we're worried about AI, the impact of AI when it comes to cybersecurity and protecting people's data, what's actually happening? Can you give people a view into the front line? And maybe that's a segue into talking into Darwinium a little bit as well.
I'd hate to plug myself. I mean, I've flown all this way from Melbourne. No, just kidding. Look, AI I know it can be overhyped, but there's 3 key things that you need to be looking at. One is, how is AI changing the way your customers interact with you? So principally, let's take what I call, and I was at the Merchant Risk Council in Las Vegas this year, where all the largest kind of e-commerce merchants get together to share and swap kind of war stories. And the real issue there was, what's going to happen when you have your ChatGPT moment, which is your most valuable customers are going to be automated bots. Or bots doing things on behalf of your customers. They're going to be the most valuable ones because they're going to be the early adopters. And your biggest risk are going to be fraud farms sitting somewhere else who act like perfect human beings. And so what that means for things like your traditional bot detection or automation detection is completely thrown out the window. So to give you another example is, we're all talking about, there's many aggregator services here that might connect to your bank account or your tax or your wealth or your super. Now, my previous company, ThreatMetrics, we protected over 1 billion user accounts, for the largest banks. But yet we had the problem where let's call it the aggregator problem, where something would connect to a bank account. And because all these banks obviously had some risk-based authentication, multi-factor authentication, it still stands when you've got an API or something that's trying to connect to you. You either go, do we let this thing connect? Because all we've got at this point in time, the knowledge of this thing connecting, the computer, the services, the IP address that they're coming from, or do we block it? And so obviously they're only able to let things through because 10 million customers would be inconvenient. So that's a real example that the only way to solve that ChatGPT problem is by having a continuous view of that customer prior to authentication, how they enrolled, once they've authenticated, where do they go, what are their navigation patterns, and how does that fit within the organization. Now, the second part of AI is going to obviously disrupt the way that your operations deal with those customers and how they're going to be leveraging these AI tools. And so I'm sure Di would be able to talk ad nominem about how they're leveraging AI. So that's also an important part. Like, how are you going to re-gear your system so that you can be adaptive, because you're dealing with new services, new customers, and new technologies. And the third part, which is completely underappreciated, not enough attention is put on it, is what is AI going to do to your adversaries, and to weaponize it. And we have zero clue. I would say we are facing a digital Pearl Harbor event where you could be faced with a bank or a fintech waking up and suddenly finding out that 99% of all the customer interactions they're having is from some digital synthetic tool.
That's what Twitter found out. Cost them a lot.
Exactly. So, so that's, hopefully that gives you some real kind of concrete ways that AI is going to impact. And it's not coming, it's here now. It's 100% possible to emulate your voice, your video. So every CEO who's done a public announcement for their quarterly updates, that data is able to be repurposed, and I can reproduce and sound like that CEO, right? I can look like a video, I could do that. I can emulate your keystroke biometrics. Any digital signal, right, that a human being can create, AI can do it as well. So, yeah, strap in. And that's what Darwinium's for.
Awesome. Dan, I could see you. Did you have a response to that?
Oh, yeah. Look, I was just sort of going to pick up on one thing that Alistair said a moment ago is it's not just about customers. Obviously, customers and fraud prevention are a huge part of this whole conversation. But the other thing that I don't think is getting enough attention is insiders, employees. Mm-hmm. And it's a really hard conversation to have sometimes, because we obviously want to trust our employees. As a boss, I've led teams for many years. I in some ways implicitly trust my employees, but it's not about trusting them as good humans to do the right thing necessarily. It's about trusting that they haven't actually been compromised, and that's an important distinction, but it's a hard one to realize, or hard one to, I guess, accept, because that's how most breaches happen. It's that employee might have been doing the right thing, but and this is where it connects to the fraud thing. If they've been scammed, phished, lost credentials, maybe their password was leaked in an attack from 6 months ago, and they've used that from some completely independent company, and attackers bought that password list on the dark web and now using it to credential stuff into your company. You've got no hope. And so actually the message that I preach, and it's what CipherStash is about if we're on the plugging bandwagon, is that we need to start applying the same kinds of highly secure principles to our internal organization as well as to our customers and externals.
Awesome. And I don't know if it's helpful there actually to talk for a moment about what CipherStash does in a bit more detail in terms of encryption at rest versus in transit.
I love the sound of my own voice, so I'm happy to talk. I hope
It's a great voice.
Yeah, thank you. So CipherStash really, our platform is designed to prevent the leading cause of data breaches, which is attacks against people. Now, the other way that can happen is through malicious insiders as well, but we put them in the same category. And the way that we do that is using this idea of encryption as access control. You might have heard of this idea of encryption at rest or encryption in transit. So this is a new term we call encryption in use. And so that means that data remains encrypted at all times, and it means we can put a protective layer around an individual record. And that layer allows us to apply policies to it, record when that record is accessed by who, and it will work anywhere. So it can work in a database or an application or even in a spreadsheet. So it gives you a total picture of what's going on and how your data is being accessed.
So you don't have to worry if employees are trustworthy. You can expect they'll fail and have a backup in any case.
Well, the first thing is obviously you do obviously still need to think about how trustworthy your employees are, how good their security is. But the first point is just reducing how much access employees have in the organisation. You want to get that down from 70%, to only least privilege, minimal requirements. But then if someone is compromised, how do you detect if an authorised user who is ostensibly doing the right thing is actually compromised, and that access and that activity is coming from an attacker instead? And so that's the other side of the equation, is we can detect those activities.
Oh, fantastic. Thanks, Dan. So we have a phenomenal amount to cover here in 30 minutes, so I'm going to try and do an about face and change gears very gently and segue into what we've seen on the banking front in the last year, and kind of pivot into maybe I can kind of throw to Di if you want to sort of maybe just help us understand the magnitude of what we've seen over the last 12 months.
Well, I think if you'd asked me, I lived, unfortunately, through the financial crisis, like hopefully a number of us in the room did. I didn't just live in it, I was in a bank that almost went broke. So unfortunately, I worked for Citi. I was leading the war room for Citi, because we were at war. We were trying to survive for a large 6 months of my life. Little story, I had an 8-week-old baby that I probably didn't see for 4 weeks. So it was pretty full on.
But Citigroup survived. So.
Citigroup definitely survived, and that little boy is now 15. And,
the boy survived too.
One of my most proudest projects, and he knows how to cope without his mother a lot. And why I bring that up is I don't think that any of us would have expected that in the last 12 months we would see Credit Suisse and Silicon Valley Bank collapse. I really thought it just shows you how we put regulation in place and certain presidents change things, but we forget. We forget really quickly around some fundamentals of business and running businesses. Credit Suisse is a story of operational risk. So Credit Suisse didn't have a liquidity event. They just had a massive operational risk issue that ended up to that point where they decided the government stepped in and sold them. So that's a really unique position for a large institution to find itself in, where the operational risk issues of the bank end up in a default position. And then you have Silicon Valley Bank, where really fundamentally, what is a bank good at? A bank is good at managing a balance sheet. Managing the difference between a deposit book and a lending book, and then investing in appropriate instruments to be able to manage that. And they failed at that miserably. And the regulations really let them down. Now, I don't think any company should rest on regulation. Regulation is there, but companies should be thinking about how to manage their businesses prudently. But you had two very different situations. What a bank is fundamentally good at, and I think that you could draw, and I apologise for any bankers in the room, I was one, so I'm criticising myself. Bankers traditionally have not been good at managing operational risk, but to have a bank fail in 2023 around balance sheet management is quite a surprise. And I guess my message has been to, I've got the benefit of running treasury management platforms for banks and helping multinationals and corporates manage their cash at bank. And my message to this audience and to other audiences has been the most important element is your cash flow and how you're managing that and diversifying your banking relationships, because you just never know. I really hope a lot of you are looking at your banks that you operate with and what's their capital position. How well funded are they? What are you evaluating them from a risk perspective? And as a founder, you don't have a lot of time in the day to do that. But I think there's many of us, or we know people who experience that with Silicon Valley Bank, and a really simple thing of a multi-bank relationship is really important. And so coming out of a large institution that almost went to the other extreme around risk management for very good reason, having a discipline of risk management in a startup is critical, because these events will happen. It doesn't mean you need to plan to have a 200-page living will. The one that we developed at Citi was like tens of thousands of pages. If the bank was to collapse, not again, but if it did. So really having an understanding of what are those black swans, what would you do? Even as simple as, if your bank does go down, how do you get the money out? I had a number of founders who were ringing me on the weekend saying, can you help me format a SWIFT payment? I'm like, sure, but next time can you have that in your plan? So a little bit of a long answer to that, but really the fundamentals of risk management are important in any company.
Yeah, I think many in our portfolio, and certainly I think pretty much everyone on this stage recalls vividly that weekend in March when SVB went, everyone thought they were going to lose their cash. Any reflections from you guys, Al, Dan, on like that weekend? Or I don't know if, Di, if you have other practical sort of...
I had a question for Di,
go for
actually,
it,
which is, I think, hopefully bringing together like the financial risk management side of running a fintech or a bank or a startup, and how that kind of crosses over to cyber, and how is Australia, in terms of the fines, how that's kind of different from many other countries, and what that means for fintechs and others in the room.
Yeah, it's a great question. So I think if you look at the fines, especially the Medibank private fine, I mean, that fine was also a capital charge, so having to hold extra capital. Sure, paying a fine of $250 million still hurts, but if you then have a capital charge that impacts your return on equity, that has far greater risk on your business. And so you've seen, you actually just recently, I was looking at something this morning where the US has started to look to implement that, but that is why in this market it is such a fragile position to be in, because it really impacts your market position to be able to price, especially if you're a bank or your insurance company, the ability to be able to price at market with additional capital that you're carrying. I can speak about the Westpac situation with the additional capital that Westpac had to hold after the AML fines. That has had systemic impact on that institution, and you'll see the same with Medibank Private. So paying a fine, sure, hurts. The long-term challenges of holding extra capital has massive impacts on your balance sheet.
To come back to this connection that you touched on, Alistair, and to extend upon that, I think it's interesting that in finance, it's obviously, everyone knows it's a highly regulated industry. And banking is a highly regulated industry because if the financial system fails, then people's livelihoods are put at risk. You know, people lose their homes or they can't feed themselves or whatever. That's why it's highly regulated. The funny thing about data protection and cybersecurity is that it has the same effect, can have the same impact, and yet we haven't regulated it as much. And I know there's a lot of debate, a lot of discussion, pushback even on further regulation on cybersecurity or data protection in general. But I think it's important that we recognise why there is a push to do that. And one of the examples I sometimes use, if I get an electrician into my home to install a light switch, that electrician needs to have a license. Or an engineer who's designing the framework of a building needs to be a member of Engineers Australia and have their certification. And yet a software developer can come out of high school, not even have a computer science degree, and go and work on a system that is managing 10 million customer accounts that might have many vulnerabilities in it, and yet we don't apply any scrutiny to that. So I think the cyber and data industry has a long way to go in order to get to where we need to be.
And just to pull that thread a tiny bit more, do you have any ponderings on whether responsibility should lie on sort of training and licensing appropriately engineers, or whether this is a sort of top-down solution? I don't know if you have any musings on that.
Oh goodness, this is a dog's breakfast. Yeah. Look, so I think there's a whole bunch of things to think about. Obviously, I can't remember who said it, but somebody said before, really the buck stops with the board and the CEO ultimately in any organisation. But I do think there is a responsibility for everyone in the organisation, particularly those that are building the systems that capture and store data. And so that's usually, software developers, data scientists, DevOps engineers, those kinds of people. And I don't think we're going to get to this anytime soon, but I do think there needs to be some sort of a certification process in much the same way that a structural engineer or an electrical engineer needs to go through a certain set of checks and balances in order to work on those kinds of systems.
And this exists within organizations like risk governance frameworks, and
Yeah.
There has to be someone held accountable.
Precisely, yeah.
Fantastic. I think, how are we doing on time? We have 1 minute. Any parting thoughts? I mean, we have a wonderful panel here. We've covered a lot of ground. I hope there's been some good nuggets in there. Any parting thoughts you want to leave the audience with?
Look, the importance of risk management, understanding where the risks lie in your business. We've talked a lot about cyber, but there's probably 4 or 5 others that you should be top of mind, and working as a leadership team to understand those, and then working out who can help you with managing that risk.
Yeah, and on top of that, don't ever fall into the trap of assuming it won't happen to you. Because as we've seen with banks, it happens to banks we don't think about. It happens to telcos and healthcare providers in sense of cybersecurity. Shit happens, and you need to be ready for it.
There you go. Shit happens, people. Be scared. That's what we'll leave you with. I got that line from Simon, actually.